Good morning, traders, and welcome to the morning update. It's the 7th of December, and my name's Marco, and today we're going to have a look at what news is coming out and any potential trading opportunities and markets that we're already in. Okay, so news that we've got coming out today. We've already had the Australian GDP figures quarter on quarter that actually came in a little bit worse than expected. This has been a market that's been a little bit of a problem for me, let's say. We've had orders waiting at the 7,500 area for the last couple of weeks, and the Aussie dollar has been testing 74.95, 74.96, 74.98 the other day. It's coming very, very close, but just not quite touched the 7,500 barrier where I've had limit orders. Now you probably wonder why I've not been entering live. Well, yes, we are in expansion mode here at Phoenix Blue, and our other traders in the Protege group, yes, they've been active live. Unfortunately, when you do have other things that are actively taking place around your business, sometimes you have to just leave your orders there while you're concentrating on either giving a service to other people or growing something or other meetings. And unfortunately, this is a market that we've been so close on but not actually made any profits on, and it's given some really good opportunities to be banking 50, 60, 70 pips first target, and then stops to break even. It's happened 3 times in the last couple of weeks. So the traders out there that are part of the Protege group, well done for taking the trades once they've got up in around the zone of 74.90. Okay, the main news really coming out of the London session is going to be the manufacturing production month on month. We're forecast at 0.2%, which is down from the previous month. Let's see where this comes in. Sterling's had a bit of a reaction off its ceiling resistance level. We'll talk about that chart in a moment. But I think the major news of the day is going to be coming out of the crude oil inventories. So this will be the first numbers released since OPEC came to the deal. Agreed a deal, I should say, and this will be very interesting because as of last week we saw crude push through $52, and we did get long, and we would have expected that the market to continue surging, and once we got a close above and started pushing through, we actually moved our stops to break even because we thought this was going to be a runaway market. In the end it turned around, stopped us out for break even, and we are currently short it right now, but we are going to be aggressive with our stop loss. The reason we're short is, well, in fact, actually the best thing to do is I'll wait till we come to the chart on that. The impact though of the crude oil price today, if we do have larger inventories than expected, what we should see is a big decline in crude oil. Okay, so the deal agreed was to cut supply. So if we see a larger inventory than expected, we expect to see a big sell-off in crude oil. However, if we do see a reduction in numbers as forecast, then what will be interesting is to see if the inverse head and shoulders that we've been looking at for the last few months now will actually play out, and we get that move that we anticipated, that I talked about and did a post on. If we do get that close above the 52.30, we should see a continued surge up to $60. So crude is right on the balance right now, and obviously with the correlation with the Canadian dollar, you've got impact there as well. So if we're going to see a strengthening crude oil, we'll see a strengthening of Canadian dollar. If we're going to see a weakening in crude oil, expect to see the same over on the Canadian dollar. In terms of the bank statement, rate statement and overnight rate, we don't expect or envisage any changes there, so we'd expect that to stay at 0.5%. You never know, they may shock the market, but it's not anticipated. And then we've got Governor Wheeler from the Bank of New Zealand speaking this evening. Last time he spoke, he mentioned that there was further room for cuts, for weakening of the Kiwi should it be needed. So this will give us an indication of what he's looking at leading into the final month of the year and start of the new year. Okay, time for the charts. So let's have a look at the dollar index. So what we had over here was major highs, and this is what we were looking for the market to break out of, which it did, but then it stuttered and stalled and started to come back towards it. And then you've also got this longer term channel, which is now come back. It's tested the 61.8, it's tested what was resistance, now our floor. And on the smaller time, we've seen a change in cyclicity, so we might see a dollar bull run now. We might see the dollars come back in. However, it is the start of December. We do have the ECB in coming days and the Fed in coming days, so let's see what actually comes of this. I wouldn't be surprised if it's just a little bit dormant over the next few days. Okay, euro dollar. Well, what can we say about euro dollar? The Italians vote no. The euro surges 300 pips. So it's a little bit out of play really for us right now. There's nothing I really want to do with the euro dollar. The way I'd look at the euro dollar now is we could potentially see some sort of bullish momentum up to the 108.40s. So I'll be looking for some sort of run up into here where I'll be looking for shorts. Where it currently is, it doesn't interest me at all, if I'm brutally honest. I think you're just trading in the middle of open space and asking for trouble. So I'll be staying clear of euro dollar. Dollar yen on the other hand, you're not in open space, you're right at the ceiling, you're right at resistance. We do have a commitment to traders signal, but the question is, are we seeing the government intervening at all, or is this just purely yen weakness? I would say it's a little bit of both. So if we break through this, we're going to have a failed signal, and I'd expect to see the yen run on towards 121.50s. Sterling, where you can see the market came up into our zone, only just clipped it, taking from this low here, it came in, clipped it, and then we just dropped down the time frames and looked for a nice change in momentum, shift from buyers to sellers, I should say, and we got in on a nice little retest, and we're sitting nicely in profit. I can bring my stops down. It was a reduced risk trade. We'll be looking at getting back into this market depending on what happens with the news today. If the news is worse than expected, then expect a further push down, test this 125.14 area, and then moving down to 123s. Okay, WTI. So 2 days ago, this is the move that we saw break and pierce these highs. This is where we got in long as it broke through at about 52.15. The market pushed up to about 52.40. With that kind of move, we thought this was it. We were off to 60. We were aggressive with our stops because we know how volatile oil is. The market came straight back down, stopped us out at break even. Then we got a nice rejection candle at resistance. Now you can't see the full picture right now, but this red zone here is the neckline. This is the right shoulder, and if you look left over here, there's a left shoulder. So you have to pull this up on your own charts. So what we're saying now is if we do get any sort of momentum through here, we've got, if you are going to trade it as a neck and shoulders, you've got 52, you've got like a $22 profit target, so you're talking a $75 target on oil should it break and close above here. But the next major resistance really is $60 through this level. However, if we get bigger numbers than the inventory is expected, we could quite easily hit first target and be out of this trade today, which our target's only set at 45.50. So just where this momentum move started. Realistically, you could maybe look at a $43 target, which is this level here, and then the next one's 41. But we'd rather just hit target and get out of this particular trade. So watch this one closely. Numbers today will be very, very important, and it's also going to reflect on dollar CAD. Final trade that we're looking at is sugar. We took sugar long yesterday. Nice 3-bar reversal. We can see this coming in here. Short-term trend line break. We've gone through that, so we've entered here. Stops underneath the lows. Risk reward just over a 2.2 to 1. See a nice little bit of bullish divergence. It is a COT signal. However, we envisage that this COT signal is a short-term signal, not a long-term or correction in trend. Okay, so that's it from Phoenix Blue, and we look forward to seeing you bright and early tomorrow morning. If you've got any questions on the content, please don't hesitate to drop us any emails. or comments on the video. Hit like, share it with your friends, share it with any traders, and we'd look forward to working with you next year. I mean, if you're looking for a mentor, if you want to join a course, if you've never traded before, drop us an email. We've got some really good, exciting material coming out next year, especially for new traders, anyone that's never seen a market or understands how you can trade the financial markets. We've got some introduction material where you can actually start to learn how to trade for a 2-week trial run, and from there you can make up your own mind if it's something you want to get involved in. If you want to know more about that, drop me an email at mark@phoenixblue.co.uk. Okay, have a great day, guys. Bye bye.